Hey, good morning. This is Meir Valensky with Driving Markets. Okay, so first of all, sorry for the late broadcast. Had some problems with my phone and it just wouldn't record for some reason. So I took the first opportunity, got it fixed. Now I'm back online. I know you're all happy to hear it, but those video junkies and those driving markets junkies, calm down, relax. It's happening. You're going to get it in the next few minutes. Okay, so let's have a quick recap. The markets yesterday were very quiet. Bitcoin came off a little bit from the 21,500, 21,700 level to just below the 21,000. So there's a good trading opportunity. As I mentioned, it's stuck in a tight trading range. So on something like the currencies, you can definitely trade. We'll come back to, on the cryptos you can trade. We'll come back to that in a second. Let's look at the bigger, the macro picture. The markets were quite flat overnight. Not a lot happening. Sort of waiting for something to happen, whether it's on the upside or on the downside. Remember, there was a big move on Friday and it simply did not follow on yesterday, which was a bit of a disappointment to the bulls. And let's see where it's going to go from here. In my opinion, it's going to be range bound now for the summer months, unless some critical inflation figures come out or something unusual happens. So you can definitely trade the range, look at the highs, look at the lows, and just trade amongst those, trade within that range. Interestingly enough, oil is back on the uptrend. I did say all along, I do expect oil to go to $150 a barrel. I did say by August, September. I could be wrong, but I'm still going to put my name and reputation on the line. I think we're going to see by September $150 a barrel of oil, just purely due to several things. You've still got the war going on in Ukraine, Russia, and you've still got very high demand in China opening up now and sucking in all the available supply and all the available reserves. Also, you've got massive travel going on now in the summer holidays. If you look at the airports around the world, it's absolute chaos there. People are booking tickets and travelers are booking 2 times or 3 times the price just to get away. And that's also going to pull on the actual demand of oil. So you'll see oil creep up, and unfortunately the price at the pump is just going to get higher. I also suffer from it from driving markets. It's costing me a fortune here, and the subscriptions are just not justified to keep it going. But you know what? I'm willing to lay out the few quid to fill up the tank in order that you guys can enjoy it. But so expect oil to go up. Regarding the other assets, let's look at a few other assets. In terms of shares, if talking about one day or 2 day trade, I would probably be a seller of Tesla for the short term, but definitely over the long term the trend is down. So those traders who are looking for a particular trade, look at the high techs and maybe take some profits, because they've risen up quite a lot since Friday. Take some profit there and you probably see them floating down. Tesla again will float down to around about the 650 level, and you see Amazon go down also to about the 100 level. So that's something to keep an eye on. As regards foreign exchange, I'm definitely a buy of the dollar, definitely buy of the dollar yen. It looks like the dollar is going to just get stronger over the next year, so you've got to get involved there, in my opinion. I think the pound's going to show significant weakness. You've got big figures coming out on Thursday with GDP in the UK. That's going to have an impact also on markets, on where we're going exactly. Regarding crypto, as I said earlier, take the Bitcoin, BTC, Ethereum. They're quite range bound. So Bitcoin's got the 19,000 level up to 21,500 level range bound, and Ethereum is around about the 900 level to the 1100 level range bound, in my opinion. So there could be some profit taking on the cryptos. Good opportunities there if you're looking to get on board. Regarding bonds, there was the yield has gone up on bonds as well, so you can expect inflation based on the back of that to continue being higher, because it's a good indicator of where interest rates are likely to go. Also, the US will be increasing interest rates every month for the rest of the year, probably 75 basis points until they get this inflation thing under control. As I've stated before, I don't believe interest rates is going to control inflation. It might have an impact, etc., etc. Regarding consumer habits, consumer spending, there's definitely a change in the habits. Whenever there's a tightening of the family purse or the household purse, you'll see a changing in the conduct of the consumer. He'll look to save money, maybe travel less, maybe cut back other expenses, maybe eat less, you never know. But the consumer will cope with a rising inflation, a rising cost economy by cutting back on some of the other goods, not necessarily essential goods, but definitely some of the luxury goods or things that it doesn't need on a daily basis. All right, so it's quite quiet out there. Trade the range. This is Meir Walensky from Driving Markets. Catch me on YouTube, catch me on Instagram, Twitter. Subscribe, like it, pass your comments, and have a good day.